Good afternoon, everybody. Welcome to the recap. I'm Laz, filling in for Scott today. I want to go over here a little bit of a few different things. We have a mixed bag today, if you will. Things to cover. It's a market right now. It's a trader's market, meaning that it's built for individual symbols right now, not for the actual overall broader indexes. Let's take a look here. We go right to the charts. We're going to look at the weekly here on the S&P. Not much to talk about. We can actually even flip over to the spiders, which is really more of the trader's instrument. Last week, a lot of indecision. We started the new year last Tuesday on a nice gap up. We had a nice 20 handle gap up in the spiders. Opened up around 128 in the S&Ps, in the spiders. And today we sit a week later and we are still at 128. So no general direction here so far since the opening of the new year. That being said, on a smaller time frame, here's the spiders. Looks like they could be gearing up. Watch this 8-period MA. You can see it's acted as a barometer of short-term support here in the S&Ps. We pulled back late last week. I believe it was Thursday of last week, and it was immediately bought off that 8-period MA. You can also see the same action back here in late December. So keep an eye on that in the short term. We could be gearing up for another trade above last Tuesday's high. Again, just sort of the short-term pivot. We could see another move here in the broader market. If we are talking about stocks, we have to talk about where leadership was or where leadership is. I know that over the last 2 weeks, a lot of traders have been pounding the pavement with Google. Google saw new highs back here around 660 just a matter of a few days back. And we've seen some pretty aggressive selling today being really the worst of it. Big volume today on that trade. Very, very interesting looking pattern here. This is something that we've been talking about, or at least I've been talking about, a little bit of a broadening pattern. You see this quite often. Very difficult to trade because the one common ground here is that new lows get bought and new highs get sold. What do I mean? Well, you can see we actually made new lows here, rallied back, made a new high. Once we made a new high, we then undercut this prior low. Then we rallied back, made new highs. And we've been riding up here, jumping out of the pattern here a couple days ago and failing pretty hard. So not much to say or do at this level. We have short-term support down here in the this pivot low is around 612. So keep an eye on if that comes into play in the next day or two. But Google, for those of you that have been long, unfortunately, this is the nature of the beast right now, and this today eliminated what was about 3 weeks of trading, or the entire month of December, in one trading day. So pretty powerful move there, and something we need to keep an eye on in the days ahead. Apple, our really only sort of benchmark leadership, the one to go to. Since mid-December, we've seen a move off the 380 level. Now trading what was 52-week highs. Today we did poke our head through this prior pivot high set back here in October. We did poke through and we did tail down today. So this is the type of candle that'll probably lead to some sort of shorter term correction. You don't want to be buying at new highs in this market. You want to be buying on pullbacks. We're going to watch to see how the stock acts on a pullback into some of these short-term averages, as it's had a very, very nice run in a relatively short amount of time. So I'd be hands off here on the Apple trade, as today, today's price action tells us, a little bit of a topping tail after a nice run into new highs. And the one thing about this market that's been, sort of almost an exact, is that we've seen new highs get sold pretty frequently. So be careful here buying new highs. You don't want to buy new highs. You want to buy pullbacks. The reason we always stress buying pullbacks is because you're going to take on a lot less risk by buying a stock that's pulling back than a stock that's at new highs. You don't want to chase price. Chasing price in this market will destroy you. Let's take a look around the horn here, if we will. We're going to look at Goldman and some of the banks. We'll take a quick look here at the BKX, our banking index. Starting to gain a little bit of upside strength here at prior pivot high in the BKX. Again, short term, it's been relatively decent. I think a lot of that is due in part to Bank of America. Bank of America seeing a nice lift off that $5, sort of benchmark price. Now trading about 6.25. And it is, again, if the banks, it is still stock specific. Wells Fargo seems to be the one that also looks like, it's had some good buy setups, buying pullbacks has been relatively good there. Goldman, on the other hand, you're not seeing it. Goldman, to me, is definitely a source of, it's an enigma a little bit, not really participating here. Not a short, not a long either, really more hands-off. But if we can't see any buyers step into this and take price higher, when the BKX does start to come off, look for this one. Obviously, that relative weakness play is Goldman really not participating at all here when we look around the horn at some of the bigger banks. Moving on, we call it the JOB trade. JOB, junk off the bottom. That's what Netflix has become. It has become a great short squeeze type of junk off the bottom from the new year. You can see for the better part of 2011, the stock did nothing but sell off. And now we start 2012, and you're seeing some of that short squeeze come into play. We took out this pivot high here at right around 94. Oops, excuse me. Wrong direction there on my lines. Right there around 94. Take that off. Pretty extended here off of the lows. We saw a move from right around 65, 66 to roughly close to 100 today. So about a 40% move in the stock in about 5 days. That's the type of trade you don't want to chase. You don't want to chase this. You want to see this consolidate for the better part of a few weeks at this point. Let these MAs, these shorter term moving averages, catch up to the price of the stock. For those of you that are really more into the active intraday trade, probably going to be some shorts stalking up in here in the next day or two. We look at the weekly chart. We still could see one more push higher. This is the weekly chart. The 21 MA is right around 113. A push obviously into that 105 to 110 area probably would really pull that rubber band as far as that rubber band could go. One other time frame I like to look at is the 144-minute chart. Again, just a fib number. For those of you that are participating in the active trader class, you'll know the significance of that. Into the 200 period MA here on the 144-minute chart. For those of you that are, really tech-oriented, technically inclined. When I say tech, I mean technical analysis. Just an area to watch as we are pretty stretched here in the short term. But on the long term, Netflix, showing good price action, good volume. Today we saw a big spike in volume, 30 million shares traded. But again, the key to making money here is not chasing price, letting this set up to become a long over time. That's the key to making money in this market. It's not about, just trying to jump on board the train and hoping and wishing that you can get what, a little bit more there. It's really about defining your risk and waiting for good strategic plays. Another junk off the bottom trade we saw possibly start today was this GMCR. Again, stock that traded 120 as of the middle of September, now trading at the mid 40s. We saw a nice bear flag develop here over the last couple of weeks, and we started to see a little bit of a breakdown from this the last 2 days. But today, pushing back hard. These are the type of bars that all the shorts will have to cover, and you could see this stock squeeze higher, possibly back to our previous pivots up here around $60. So just like Netflix, keep an eye on this GMCR for some possible more upside here. We'll see. Again, it's just one up day, and that doesn't really tell us that much, but we have the makings here pattern-wise for something that could reverse course. Not much else that I think is worth reporting. You could take a look at some other momentum stocks. Sina still at lows. Amazon, into the 21-day average here on the daily, getting sold today. Amazon not showing any real relative strength. You can see this chart. Certainly not a picture of bullishness, at least not for now. And I think there's a lot of traders out there looking to short Amazon on any sort of short-term pops here, as that's sort of what the price action is dictating. So like I said, in summary, we really have a mixed bag here, and there are places to be. I've said it, I think, over the last couple of months, the haves and the have-nots. We don't really have the broader market participating with us right now. It's sort of a non-event, if you will. Futures really aren't making higher highs, aren't making lower lows, sort of stuck in the same place. That's a good thing. That to me means energy is building, and at some point we will break out of this range. And when we do, it'll probably be pretty ferocious depending on the direction, whether it's up or down. I don't really have enough data to support it. Obviously, if we go back to the spiders and we look at that daily again, you know, this is a chart that looks pretty bullish to me. We have rising averages. It's just a question of when. So if I am looking at what direction this favors, it does favor new highs. But again, this is a very, very news-driven, you know, market where you have to be very price sensitive and very, very particular about your entry and exit strategies. So we'll just see what happens over the next couple of days. But right now, it is a market of specific symbols. It is a market for those of you that are short-term day traders, you know, with 1 to 3 day time horizons. I think those are the traders that are having the most success in this tape right now, and I think that'll continue until the market really tips its hand and gives us some sort of, you know, market-driven, more macro type of trade, which right now isn't happening. So as always, stay prepared, stay patient, stay planned. Scott will be back tomorrow for the morning call, and I will talk to you on the virtual trading floor tomorrow. Have a great night, everybody.